What is up, everybody? Today is Tuesday, January 7th. It is the first losing day of 2025. So I took two trades today. Both of them were losses, and we'll get into why I took each one and what I could have done better at each one. But overall, coming into today, I was bearish biased. And the reason why is because we failed to close above this 4-hour fair value gap right here. And this has been my bias for a while now in terms of what I'm expecting price to do. I was hoping that price would come on up, tap into this area, sweep that high right there, and then begin its descent down lower. That is what I'm still expecting on price. And so I was looking for an hourly close below this level right here, which was also a 1-hour fair value gap. We had a 4-hour fair value gap there too, and I was expecting for price to not be held by it, mainly because of the fact that on the hourly we had this 1-hour FEG where we tapped into once, and then we tapped into twice, and then sold off from. And if you also notice the daily candle when it was created, here was the opening candle of it. Just put this back like that. Here was the open of the daily candle, and you can see price continuously kept coming up to it and rejecting off of it, showing bearishness on the day and wanting to put in a down close candle. So that is what made it super obvious to me that we were going to end up going lower. And if you look, we had this 1-hour FEG. We had this bullish one right here that did not hold at all. And so it was pretty apparent that we were going to drop. Now, very, very obvious, right, here in hindsight. But for some reason, the execution today was very difficult to be able to execute well. So taking a look at the 15-minute time frame, I ideally wanted a pullback up into some kind of a 15-minute fair value gap and then rejection and continuation on lower to these levels right here, that one right there, and lower. But we obviously did not get any kind of pullback whatsoever. And so that obviously did not help in being able to execute well. So if we take a look, right, this was the only 15-minute fair value gap that was created today. We have a lot of wicks, right? These are very wicky candles. You see there's a huge wick, two big down wicks. These are it's not really often that this happens. And so the first trade that I took was during the macro session at 10:50 to 11:10. We've had this move up, creating that 15-minute fair value gap, dropping, and then we started coming back on up. Now here we rejected off of this 1-minute fair value gap. This was truly textbook for me in terms of the model that I use, right? We have the move on up, then we have an imbalance right there that gets invalidated with a strong displacement. I entered in, put my stop above the swing high, and lo and behold, we chop around for a little bit and I get stopped out. Now what I missed on this was taking a look at the 5-minute. I should have kept an eye here. We had a 5-minute fair value gap, okay? And on that 5-minute fair value gap, I should have waited for this to get invalidated. If that did not get invalidated like it didn't right here, then I should not have taken the trade. So hindsight, right? Seeing that I should have waited for that. Now here is the invalidation at 11:45, okay? At 11:45, we invalidated that, and then we began the 11:45 candle to 11:50, and then at the 11:50 macro, I should have looked for some kind of short. Now, funny enough, I did look for a short at the 11:50 macro. So right here was the beginning of the 11:50 macro. Price comes on up, creates this imbalance right there, and then it displaces through it. As you can see right there, I was short, and I got stopped out on that one too. So very unfortunate that I got stopped out on these. This should have been the first trade I took. This I should not have taken. I did not have multiple time frame alignment. This one here, I missed on the fact that it did not retrace deep enough for me to be able to be considered going into premium and then dropping, at least on this push on up. But even then, so regardless, I wouldn't even consider anything here being an A+ setup. So unfortunately, this trade should not have been taken. This trade, kind of fit into what I was looking for. We had multiple time frame alignment, and also at the 9:50 to 10:10 macro, there was red folder news that I did not feel comfortable taking anything But regardless, there was a setup right here. You can see it pushes on up, drops on down below that right there. You could have entered in short before the news, but that was very risky to do that. So because there was red folder news today. Now I don't usually like to trade before that, but it seems like that was the move. I used to do that often. Maybe I should go back to it. We'll see. But yeah, this trade, no bueno. This trade was okay. Had I only taken this trade, I would have made everything back if in the afternoon I would have seen this, where we have this IFEG here on the 5-minute. We come back up into it. We are now in the 110 to 140 macro. And as you can see, we have an inversion right there. Immediately gets a very strong displacement candle. So I could have taken shorts here, put the stop above the swing high, target low of day for a nice 3.55 risk to reward. And that one took a little bit, but regardless, we end up hitting that anyway. So if I had to done the right thing and not taking this one, took only this one, and then would have made my second trade on the day this one, I would have ended up totally fine. But today's price action was so weird over the fact that we just consolidated around OTE and then swept it one more time. And then the same thing here, we consolidated around my entry, swept it one more time, and then finally had that drop down. So unfortunate day, but hey, risk management is what saves us. The strategy still works. I just had a misread, and that's totally fine. So hopefully you guys ended up green today, and don't sweat it. We'll see what tomorrow brings, and yeah, see you tomorrow, everybody. Peace.